One of the most common questions that I get on the YouTube channel here is, Chris, how do I start a infinite banking policy? When do I get started with my cash value life insurance policy? And how much is enough to get started? I think a lot of times people have the false understanding that they need to have tens of thousands of dollars to get started. It makes sense to wait. In fact, it's like planting a tree. When's the best time to plant a tree? 30 years ago. The next best time, most likely never gonna be a better time for you to get started than right now, with a couple exceptions. We'll get into that, but if you haven't already, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video, because I'm doing videos on this every single day. So hopefully you find value in this. If you do, please share it, like it, all that fun stuff. And that's it, let's get into it. Hey, what's going on, cash flow hackers? It's Chris with Life 180, and in this video we're gonna cover how much money do you need to get started with an infinite banking policy. Now, I use the term infinite banking policy just because it's a marketing term. There's a lot more to infinite banking. I've got a lot of other videos on this, but let's just talk for the context of getting started with a high liquid cash value life insurance policy. Infinite banking isn't just the policy, it's how you utilize it. So it depends on how you want to leverage it. Once again, other videos on that, check out the playlist on the end screen, and that'll be able to serve you. I'll put the infinite banking playlist, training playlist on the end screen, and that will help, and we can go from there. But for this context, I think one of the things that I run into a lot, I get a lot of people who are asking, hey Chris, I'm younger, I don't have thousands and thousands of dollars. How do I get started? Does it make sense to start with 200 or 400 or 500 bucks a month? The answer I'm going to tell you is yes, with a caveat. It's not so much the cash flow. Can you afford it? It's what does the rest of your life look like? I'm a big believer that we need to be focusing on financial efficiency, and that a properly designed whole life insurance contract can help you and will help you live by a set of rules that'll make you operate more efficiently with your money, and will give you the ability to leverage that money to operate as a whole in your personal finances more efficiently. That said, if you are somebody who's got a lot of toxic debt, credit card debt, so on and so forth, you're gonna wanna clean that up a lot of times before you get a banking policy. Now, taking that to the next level, what you wanna do is you wanna lock in your insurability while you can. So if you are in that situation, if that kind of fits who you are, what you want to do is you want to go get what we call a convertible term policy. You want to buy a convertible term policy. That way it locks in and guarantees your insurability. That way, by the time, if it takes you a couple of years to pay off all your debt and clean up your finances or anything of that nature, you are still insurable. If anything happens to you between now and then, you lock in your health rating right now. Whereas, like, let's say something bad happened to you, got diagnosed with type 2 diabetes or cancer or some kind of thyroid disorder or something of that nature, right? Kidney problems, anything of that nature, right? Like lots of things happen. Maybe, heck, you know what? My wife we got into a car accident. She got a traumatic brain injury. That impacts her ability to get insured, right? So you want to make sure you lock in that insurability while you can. That even if you don't have great cash flow, lock it in with a convertible term insurance policy, and you can convert that to a banking policy when you are ready, when your debt is cleaned up. That said, let's assume that you got free and clear cash flow. How much money do you want to save into a banking policy? Well, I would tell you whatever amount of money that you want to put on a monthly basis into an emergency fund is what that looks like. So it is what you want to contribute. So what I want to do now is actually show you what does that look like if we get into this. And I'm going to go here. I gotta just get this set up so I can go, and here we are. So as we look at this, this is a policy for about 200 bucks a month, just over 200 bucks a month, but you can see what it gets you. You get the benefit of $53,000 of life insurance, which is fantastic. Most people want that or need that. And you're looking at a liquidity of about 1,600 bucks out of it. So you're looking like 75% liquid on this policy, which is pretty solid for year one. By year 10, you've contributed $24,703. You got over $25,000. So this is why I call these things a savings account on steroids, because you can see as the cash value goes up, the death benefit increases with it, right? And so as you do this, it just becomes more and more and more efficient. You can see Starting in year 5, you got 2470 and it grows by 2463. So the first 4 years, you're lagging a savings account a little bit, right? And so I think it's important to understand that with the new money that's going in. But after that point in time, this is the most financially efficient vehicle in the world that you're ever gonna find. And I always kind of tell people, don't make short-term decisions to solve long-term problems. And the bottom line is, if you're, like this example, if you're 30 and you're thinking about how do I save, where do I save, do I believe I need an emergency fund, would I like to have an opportunity fund? If I do believe in those things and I want those things, where do I save them? The best place to start is right here, because from a long-term perspective, it's gonna help you solve multiple problems in your life. It's getting your dollars to perform multiple functions, and that is, it's just a powerful thing. The other thing to understand here is, like, a lot of people will tell you, $200 a month is not enough to get started. Well, $200 a month probably isn't going to accomplish anything significant for you. It's not going to get you to like your big objectives, your big goals. But the best place to start is now. The best way to start is just get started, start implementing a habit, start building the principles, start leveraging and start utilizing this principle to kind of build the skill of utilizing a banking policy in your life. And start small. It's like the old biblical principles, like start small, have good stewardship with a little, and then you can grow to do a lot. The good news is you can stack policies. So if you started with 200, you could then go to a bigger policy. Quite frankly, I think the reason that a lot of people don't like to start with small amounts is because of the fact that they don't make a lot of commission on these, right? Like, I mean, as it is to design a policy, a banking policy, compared to a traditional whole life insurance policy, you got to take a huge commission cut off the top. So when people are saying you need to start with bigger amounts, typically they're saying that because it's a lot of work, a lot of energy, a lot of time that goes into helping you get this set up, and there's not a lot of commission to be made by this. And so that's why I think a lot of people are saying, oh, you got to start with bigger amounts of money. That, and I think typically a lot of people that only have a couple $100 a month in contribution for the premium typically have other issues that they need to clean up. And if you can do other things to clean up more and free up more cash flow that you can then put into the policy, sometimes that makes sense as well. But it's really kind of a case-by-case basis, and you got to kind of take it based on what your situation is. So this is a $200 a month one. So what I have now is I want to say, all right, you got $200 a month. Well, what if you could start with 400? What would that look like? Well, it's the same deal. You can see we go, you pick up about double the insurance here. You still have about 75% liquidity. That's fair enough. Actually, I want to get the exact number on that liquidity. Let's take a gander right here. 32, 43, 4,800. So, all right. So you're looking at 67.5% liquidity year one, right? And so, it is what it is. It's not necessarily, this isn't what I would call like the most optimized policy, but from a long-term perspective, this is a pretty solid policy, right? Like, it's going to grow. The purpose of this is not to talk about optimization. We can get into different optimizations based on your situation. It's just to show you the overall philosophy of getting your dollars to perform more than one function. What does it look like if you start? This is a 40-60 design policy, kind of a traditional banking style policy. It has a good blend of base and paid up additions. All of these, by the way, are the 40-60 design that I'm showing you. You contribute 48,000 over 10 years. You got 49,763, $194,000 in death benefit. Once again, because we're utilizing paid up additions, you start with 105,000. It grows to 194. So this is where Dave Ramsey says, well, the life insurance company keeps the cash value. You only get the death benefit. Well, they do that because look at the cash value is increasing, but the death benefit is too. And so it's better than having a $105,000 term and saving $49,000 in a bank account. You actually wind up with more insurance doing it this way, Dave. So that is a side note. And when you get down here, look at this, at $4,800 a month, then it goes down a little bit, and then by year 26, you're only contributing $1,920 because that is the base of the premium. You've basically covered all the paid up additions. Fully paid up at 75 years old, you have an asset of $471,000. You've only contributed $158,000, and you got $471,000. You got $591,000 in death benefit. This is a great asset that anybody could get started with. That, listen, it's not going to solve all your financial desires and goals. It's not going to solve all your retirement needs, but it's certainly a way to build your emergency fund, a way to build an opportunity fund. And then as you grow, as you start to earn more income, as you do better and evolve through your financial life, you start adding other things on top of this. I'm a big believer this should be a foundational core asset that everybody gets started with, because it helps you have more stability in your personal finances by having that emergency fund. Because when you have that, it helps you operate more efficiently in every other area of your financial life. Once again, the purpose of this video is not to go into that, because it will become an hour-long video if I get into too off track with what I'm doing here. I have other videos that go into details on all that, so make sure you subscribe and hit the bell. That way you're notified every time I launch one. And go check out my playlist that I put on the end screen here for the infinite banking stuff. That will definitely help you kind of continue the educational journey if this is your first time here, or even if you've been here before, go check it out. It's definitely valuable. So this is a traditional kind of a policy. Now let me show you kind of what the ideal would be to kind of get started. Let's say you had $500 a month. And when I say ideal, I'm talking about like small ideal policies for people that don't have tens of thousands of dollars kicking around, but maybe you got like say 6-7 grand sitting in savings accounts, and you can afford $500 a month in cash flow. And that's where you get started. At 31 years old, if you did that, you could see year one, we're doing a $6,000 front load plus $500 a month, which is $6,000 a year. And out of that, you got $9,824 of cash value year one. That's over 75% liquidity. You pick up $234,000 of death benefit for that. That's pretty solid stuff. By year two, you can see, it's growing. You've got 15,000. By year 10, you've put in 66,000. You have 69,000. But look at the death benefit. Once again, we're talking about just a savings account on steroids. The growth, the increase in the net cash value is going up starting in year 5 by more than the cash you're contributing to the policy. And so from here on out, it is the most efficient vehicle in the world. Once again, don't make short-term decisions to solve long-term problems. And when you look at this from a long-term perspective, this policy alone, getting to the end, you wind up with $610,000 of cash value that you can utilize in retirement for all sorts of different ways. If you want to start utilizing this for investing in cash flow assets, you can start doing that as soon as you have like some money in here to do it, right? Like whatever cash flow asset you're looking to acquire. So, this is what it is. Like, this is why I call these things savings accounts on steroids. This is why I'm such a big believer that if you believe that you need an emergency fund, that if you believe that fundamentally speaking, you want to invest for cash flow, then you need an emergency fund to protect and insulate your financial life, that you want an opportunity fund to be able to go find those cash flow investments. Rather, you can save it, by the way. Do you need one of these? No, you don't. You can utilize a savings account. You can utilize other fixed assets. But what I know to be true mathematically, and what I've seen and what we do and what we coach people through every single day, is that if you believe those things, that you need an emergency fund, you want an opportunity fund, you want to invest for cash flow, if that is you, then the next natural question is, okay, what do I do? Where do I save that money? What's going to give me the attributes in an account that's going to help kind of check all the boxes for what I'm looking for? And the answer is a properly designed whole life insurance contract is the only financial tool in the world that will give you the attributes that you are looking for to fit those needs. And so, not very complicated, very straightforward. How much money do you need? You can start with as little as 200. You can go as high as literally 200,000 to 2 million a year. We've seen it. We've done it. But here's the bottom line. It's not so much about how much does it cost. It's a function of what's your cash flow look like, what do your finances look like, what's your overall financial picture look like. Do you need to tighten things up? Do you need some help eliminating debt? Regardless where you are, I guess I encourage you to go down in the description below. You'll notice there's several resource links, and one of them is a clarity call. If you feel like you're in a place where, all right, my debt is fine, I'm in good shape, I want to set up a call with somebody to learn more about how to get a policy like this set up in my life. I'm kind of ready to go. I'm ready to learn. I want to see what it would look like for me at my age, at my health rating, at my savings amounts, with my variables, with my goals, with my objectives. Go down, set up a clarity call, not a sales call. We are designed, that's all designed to help you just get clarity around what this looks like in your life. But maybe you're in debt. Maybe you have a lot of debt going on in your life, and it's toxic, and it's student debt, and it's credit card debt, and you know, maybe you got a boat or something like that, and your life is a bit of a wreck when it comes to personal finances. What I can say to that is we see it all the time. Don't be ashamed by it. The worst thing that you can do, one of my favorite quotes in the world is, just because the ostrich buries his head in the sand doesn't mean the lion's dinner plans have changed. Finances, if you don't get them right, retirement, your future, that is the lion. If you bury your head in the sand and you don't deal with this stuff, it's gonna eat you. You're gonna get in trouble. It's gonna catch up to you. You can only kick the can down the road for so long. So my encouragement to you is to reach out. We have a debt link down there, a debt elimination program. This program is, I think, just state of the art, one of the most unique programs out there. And our team, we have certified people that are designed to help you come up with the most efficient debt elimination process to help you, like I said at the beginning, if you need to clean stuff up, help you clean that up. That way you can get your feet under you and you can regain control of your financial life, and you can move forward from your objectives. The human brain is only going to allow you to put 100% of effort into something you believe with 100% certainty you'll be successful with. Chances are, my guess is that psychologically, you probably don't believe in doing the right thing necessarily right now because you don't know what to do. And that's where a coach comes in. It's kind of like a personal trainer, right? Like we all get gym memberships and we go, but the people that get trainers are the people that execute and that show up and do the work and get the results. And it's the same when it comes to your debt and a plan and elimination of all that and getting the rails set so the train can go across it. And so that's my encouragement. Just whatever, we're here, we have the resources, we have the support, and you know, that's what we do. We look to serve people who are in your position. So if you are curious to learn about any of that, go in the link in the description below and check it out. If you have any comments, any questions, go ahead and comment, and I will do my best to answer every single question that I see on the comment section, comment string of the YouTube channel. If you haven't already, subscribe, share this video out, click the bell, get notified, all that fun stuff. And until next video, have a blessed, inspirational day. We'll talk soon. See ya.